Well, hello everybody, I'm LA Little and this is your daily NeoTA wrap. We take a look at these markets and every time we do it with a neoclassical perspective. Each time we ask one question: what happened today and what does it tell us about tomorrow? Do the show 4 times a week, Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube under the channel LA Little. Word of note here, we will not broadcast this week after tonight. So Tuesday, Wednesday, Thursday, no broadcast. I'm taking off early in the morning and won't be back until Friday night. So I'll be out of the office. As far as these markets, we did get a good tell today and something for us to look at. So let's take a look at that. We can start here with the ending numbers where we can see red across the board. Nothing big, right? Small numbers, decreases. Had a big run up, get a little small pullback, nothing to worry about, right? Well, we'll see gold up a little over 0.5%. Silver was up big again, almost 2%. Dollar took a hit, down 1%. The dollar we were talking about last night, was it going to, extend that range? And it is going to extend it. And there may be a lot of people calling for the end of the dollar. I don't think that's the case, but they can call for whatever they want. I think it's just building out a larger range now. Let's look at the indexes though, because we actually have something that happened today, and it was set up by the quad witching on Friday. If you remember quad witching, right? 4 of them expiring in options expiry. That leads to a big volume surge, and then what do we do today? We go over, back under, less volume. I wouldn't call it an extended move, but it's definitely an over-under. That's going to get us back to the backside. More than likely, we're going to get some sort of sideways to down tomorrow. That kind of a price action tomorrow as a result. If we look elsewhere and we look at, say, the Dow, for example, same scenario, over, under, less volume, not an extended move, just a 2-bar. The Russell's been leading us up. Russell goes over, back under, less volume. I wouldn't call that extended either. It's a 2-bar. It's a over-under. No, I wouldn't call it a 2-bar reversal. But this does say it's going to come down, try to fill this gap, get back into the top of this bar at least. That's 12.55. We're trading at 12.64. We're not talking about a lot here. 0.75%. But it looks like it's going to at least come back that much. Now, if it wanted to, it could actually come deeper, right? Because that retest region is way back here. So, if this thing did do a decent spill, right, that would set up an ABCD structure potentially to go higher to match some of the other stuff that's already in place, right? We've already got ABCD structures in place here and there. And actually that one was already met. It looks like some of the indexes haven't. I think that one was on the daily. I think on the Russell you have to go to the weekly to find an ABCD structure that's still in effect. Most of these were pointing up. Yeah, and here's the weekly one. Most of these were pointing up another couple percent, 1.5%, 2%. The Russell was 1, 2, but it was doing it on the weekly, whereas everything else was on the dailies. But the trade today was an over/under, right after a decent move. I expect that's going to at least try to fill that gap, and maybe a little deeper. But that's the setup. Now, the savior out here is that you did not get this on the NASDAQ or on the NDX. Now, what these are doing, or at least this one is doing an immediate retest regen off that prior high that it broke over right here on the volume. So it spikes up, leaves volume at the top here. That's going to probably get tested here before too much longer. But in the meantime, it's going to try to retrace. Those retraces, when they come this quick, usually retrace to the bottom. If we look at what that point total is, that is about 49.70 or so, 49.72. We're trading at 11. So that's 28, 38, 39, about 39 points to the downside potentially. So that's the sort of trade, you'd have to expect this thing to come back and potentially do. But again, it leaves volume at the top untested. That should get tested. And let's go not to the Russell, let's go to the NDX. And the NDX has kind of the same setup, although the NDX did not get over the high. So the index is just doing a retrace. It looks like it's going to try to come into this bar. That also was a bar on the composite. So if it comes in very shallow, it will just close this little gap and turn. If it comes in a little bit deeper, it could get back into the support zones. But across the board, all the indexes after today set up the 2-bar reverse, well, not 2 bars, but over-unders. Look at these sectors. And what we have in the sectors, as a matter of fact, let's come back and do the sectors here in a second. Let's take a quick break and I'll be right back.
At TA Today, we have many services that teach trading to our clients. You can use LA's tools to trade and/or learn how to trade alongside LA using his neoclassical methodology. To earn these free services with no subscription or charge, go to our homepage, click on either the Tools and Earn Free Services or Trade with LA and earn free services. On this page, you can refer a friend. Fill out information about yourself and the friend you are referring, and you will earn up to 3 months of free service with no charge as long as your friend continues to be a subscriber. So remember, refer one friend and earn up to 3 months of free service with us. The more people you refer that sign up, the more months you earn. If you have any questions, let us know. Thanks from the TA Today team, bringing you tools and ideas to help you trade.
So the question I always ask myself when we get a big run up, and we certainly have had that here in the IBB, one ABCD structure after another, and they got very stretched, and then we get a big spike up, volume expands, and today we come off with volume. Not as much, but we come off with volume, right? That's going to set up some sort of a range trade now that more than likely is going to take a while to play itself out. The place you'd expect, at least that prior high there, could get back into the support zone. It's not going to come back, well, it could, but typically when you get this kind of bullishness, you typically don't come straight back. I mean, you don't see it go, like this and actually like this and then go vertical at the end and then see it probably come all the way back, right? It doesn't do that. It usually comes back, maybe into this bar, maybe if it really stretches into this bar or into this support zone. But it's going to try to set up a range, and a range trade, there's nothing wrong with that. You have to take a break at some point. If you do this range and you divide it up, right, you kind of got 2 of them here inside each other. It's right at the borderline of what should be kind of the second range. It may extend this far, in which case it'd have a little bit farther to go, and it would be, actually that doesn't work out very well. Probably that first one was the one to look at. So, because I like them to be about equidistant, and these two are about there. So, when I look at this, yeah, it's kind of at the border, potentially going to come back into this little congestion zone. It's got enough juice coming back the way it's coming back now to where it could just shoot them back down into this area pretty quickly. We could see it right away. So, IBB, right, it's been extremely bullish. It's one of those, I've been calling the tired O sectors, right? These things have been going and going, and they just never want to give it up. Does today, and looks like it's finally set up some sort of a pullback. Home construction, really nothing there. You got some numbers out tomorrow. We'll see what it does there. IYT, this thing has been in a range trade for a very long time, and pull a weekly over. It led all the way up the last couple of years. And then it had that deep pullback, pushes up to the new highs. That was the October pullback, pushes up to new highs. And ever since then, it's been in a range trade. It's been unable to get up and over or to get down and under this level. And it's not a bad thing as long as it holds, but eventually it has to go one way or the other, right? It won't go forever. And we're on a weekly here. Question is this going to break the downside or the upside? On either side right now, you've got a swing point high and a swing point low. If it goes a little bit longer, it will get another swing point high, which means it will have some real juice if it goes breaking out this way. Conversely, if it comes all the way back down here and sets up another low and does some more sideways stuff for a while, then you're going to have some real juice either way. Right now, it's just range trading, and there's not much more to be said about it. What everybody keeps looking at this, or why everybody keeps looking at this, is because when you look at this, and then you go over and you look at the Dow Jones, people get worried because the Dow Jones is not, and let me grab it, is not, doing the same thing. The Dow Jones went to new highs at the beginning of the year. Let me see, I'm on the daily. Let's go to the weekly here. Hang on just a second. Let me grab the weekly chart. Here we go. So the Dow Jones went up to new highs and it's been hanging at the new highs. All right, it's a different picture between here and between the transports, and that's divergence. And those who look at the Dow theory says, oh, that looks like a problem. And it may be, but I don't quite follow that theory. I'm aware of it, I understand it, but at the same time, I think a lot has changed since that theory really was at its zenith. So I'm not sure that I want to buy into that. But nevertheless, that's, the IYT, that's the way it's acting. If we look at the SOX is struggling up here. Remember, the SOX made a big move, got to the highs, right? Actually they made the big move back here. If we look at it on the weekly, got the big push down on the October lows and then just zoomed up, made new highs again, and now they're hanging. So they're not doing anything wrong, but again, like the IBB, it's a tired old sector. It's been pushing already. You need somebody else to step up, and so far nobody has. XLB, we talked about last night, looks like it wants to trade down again. XLE had a bounce, but it's struggling. That's probably the weakest sector out there. XLF has been trying to go higher. Today goes over, back under. That looks like it failed at the highs. That's at these highs, it is having a lot of trouble. Looks like it wants to try to pull back in. We were looking at the XLI. That one didn't do anything today, pulled back in as well. And we were talking last night, like most of these did look like they were going to try to, pull back in. Doji here on the XLK, so really nothing there. The only place we saw some strength today was the XLP, but that actually left a tail on the top because we got a sell-off right at the end of the day today. And the XLV, which has also been pushing, comes back in a little bit off the IBB. And of course, the other one we've talked about, the XLY, goes up, tests again, fails again. This looks like it's going to come in. So the sectors that have pushed us don't look like they're going to push anymore. So somebody else has to step up, or we're going to come back. And it looks to me like right now nobody's stepping up, and we probably are going to come back. And if you look at the world markets, then I'm only going to highlight just one of them from a price perspective. And let me grab the world markets here. And that's Germany. And the euro, and I'll go to the dollar next, but the euro has been shooting straight back up. And that's putting pressure on these equities finally. And if you look at this, you can kind of see an ABCD structure now. A little small one, right, that's kind of taken effect here. Is probably going to pull this thing back into towards this little congestion zone in this area. So about 11,500 or so. We're sitting at about 11, let's get the numbers here. We're sitting at 11.9, and it looks like it can pull back into about 11,550, 11,600. So another 250, 300 points at least, maybe 350. That, we haven't seen for, it's been a good 7-8 weeks since we had any congestion, much less a pullback. Last pullback was at the end of the year, or actually the beginning of the year, which started this huge run up. And if you don't understand that run up, you can look at it here and see exactly what I'm talking about. I mean, this has basically been straight up from 93.82 all the way up to 12.12 and 12.2. So 93.82, what is that, 600, let's just call it 600 plus another 3,000, 3,600. I mean, it's big numbers, folks. This is a heck of a run. It's going to pull back. It's time. It's going to pull back. Let's go to the And that, of course, is going to, it's going to be a buy when it does it, but it's got to do it, right? And as it does it, people are going to get worried and all that stuff, like always happens. Why is it happening? Well, because the dollar is coming back in to do some sort of a larger range. I've got the FXE up first. We got the big spike up on the Fed, right? The Fed changed the equation because they basically talked very dovishly and really put the interest rate hike farther down the road, right? Talk about kicking the can. How about, like shooting holes in it? Now you get to push up, you get over that, you dojed on Friday, you get over it today. This wants to try to push back up to the swing point high. That's 108.72, we're at 107.84, so another 100 basis points. Could get back up and finally retest and regen off these lows. And it probably is going to do that before it's over, and that's way back up here. And so you can see this still has only gone about halfway of where it might want to go. So that's the setup. That bounce is probably going to be a nice sell if you want to sell the euro or if you want to buy the dollar or whatever you're doing. Let's flip over to the dollar and look at it. The dollar had been in this big spike up, right, with these huge bars. It came off on the Fed bar, which is here, and then Friday came down, tested it with as much volume. Today the question was, will it hold this range or not? Nada, right? I was wondering if it would hold this range or not. It did not. Wants to come down and test into this congestion zone, this zone down here. So these are the swing point highs. Those were the breakouts. That will be the retest regen. So if you draw it out, put it over here, that's where you want to be looking. That's where it's going to try to get to. So as it pulls back into that area, that's probably going to be the buy area. That's probably going to be the sell area on the others. If we get a decent push down in equities in Europe, it's going to put pressure on our equities, which also figures into the idea of some sort of sideways to down action tomorrow. So across the board, right, you're getting rotation, and you're getting that rotation into commodities like gold. You're getting the rotation into, well, actually you're not getting it into bonds. Bonds have already done it. Bonds look like they're trying to fail here and come back. They may get one more little push, but then that's probably it. And they're rotating or attempting to rotate into, of all things, oil. If you look at the USO, 1688 is the high. The high over here was 1681. So it goes over it. And where does it close? 1678. Goes over it, back under it. Goes over this one. 1690, that high was 1678. Closes 1678. So you go over it, you go back under it here, you're at the level there, you don't have any volume. This still looks like it wants to try and fail. It may get the push, but right now it's really struggling. And if it does fail, right, that also could be an issue to the equity markets if this thing really starts to dive, right? That would be an issue. Something else to keep on your radar gun. Okay, let me take a viewer question. Actually, it's a clarification of what we tried to do last night. It was kind enough to write me back and clarify what I had said, which I could not remember, which is not unnatural for me. And then we'll go to the final thoughts after that. Be right back. Okay, so the question last night that I just could not remember and didn't get right really wasn't with the utilities, which I thought it was, but it was with the SRE. Sempra Energy, this was a utility. The question was whether or not this was going to go higher, and the question to me, it said SRE just did a successful retest regenerate on the weekly, right? It was a question to me, and this was on this bar that he was talking about it. And I simply said I would stay away from the Utes. That was a comment that I made. And I said on SRE in particular, no, it just closed under the prior lows, or excuse me, under the prior swing point highs low for multiple days. And that was what the member was asking me to try to clarify. So let's take and dissect what it is I was talking about, because now I remember it, and yes, this is what I said, and yes, there was a reason for it. which is always good if you have a reason for what you do. This is the prior swing point high, right? And we got underneath that high. So as we came under that one, well, actually there's two. The one I was talking about, let me get it right here. The one I was talking about was this one. And why was I talking about that one? Well, because you had a break over it here. So you get over it, you come back to do an immediate retest, right? Holds, these two bars, it holds. So let me get my arrow here. So you go over, that's this arrow, go over the high, right there, close over it. Now you get an immediate pullback. That's an immediate retest, regenerate, to try to regenerate higher. What does it do? Comes down, it tests 2 bars, and then goes straight back up and tries to break out. But it fails, right? Goes back over, back under, and then what does it do? Right here, it breaks. It breaks up underneath that prior swing point high. Stays under it, tries to get back in it, can't, stays under it, stays under it, stays under it, right? You got like 6 bars down here. What I was referring to is that you've probably heard me say this before, and that is that if you go over, and there's actually another good example on this particular chart, if you go over and make a new high, and then you break back underneath that high and you can't get back above it, and in this case it did it right here, got back up underneath it. In other words, it was excuse me, I'm a little tired tonight because I've been up a long time. That's not the bar I want. Let me go back over here. You break over it here, right? That's the breakout. Now you come back, immediate retest, regen. You come in, you test, but you can't get underneath it or stay underneath it for more than a bar. And in this case, it didn't stay under it at all, right? Got under it, got back over it, the same bar. Here, you stayed under it for like 6 bars. When you're under the prior swing point high that you're trying to retest and regenerate from, you don't want to see it stay more than 1 bar. In other words, it was under it right here. That very next bar, it really needs to get back up in there. If it doesn't, in my mind, you know, and in the work I've done, that says that instead of this way, now you're going this way on this time frame. And as you can see, you really are going that way on this time frame. This hasn't been able to get back up here, right? It hasn't broken down yet, but that juice that it had going is not there. And it's going to consolidate. And I don't want to be in stocks that are consolidating unless I'm trying to range trade those stocks. If I'm range trading them, well, that's a different story. You know, I'm buying and selling tops and bottoms. But in this particular case, you know, you basically have 2 quadrants. Yes, it got over this one. If it doesn't get up and get to the top here pretty soon, it's going to fall right back down here again. What is it doing? It's range trading. It's consolidating. That consolidation may be nothing more than a consolidation before the next breakout. But you don't want to be buying here because it could just as easily come back down here again. If anything, you have to let this thing now go up and break these highs again before you buy, because it has to prove that whatever that consolidation was going on is over. So you either, if you want to, you know, if you still think this thing's going this way, you want to buy towards the lows, not in the middle, or you want to wait for the breakout and buy it. That was what I was talking about, you know, when I talked about it being under their several bars, the fact that once you get under it, you really need to get back over to the next bar. It tried, couldn't do it. That says, hey, sellers are much more powerful here than they were, and that this thing at best is probably going to range trade. That's the idea. That's the neoclassical way of looking at that chart. All right, I'll be right back and we'll do the final thoughts. Okay, as we come back here, you know, I want to finish with this ideal of, you know, we should get some sort of a retrace here. One of the things that's been going on that's been kind of strange, actually, is that, you know, if you look at this chart kind of closely, you've essentially had for, I'm looking back to find one, it's like, it looks like about right here. This was the last time you had 2 days up in a row on the S&P 500. As a matter of fact, you had 3. A nice big spurt as it broke over the swing point high. Since then, every up bar gets a sell bar the next bar. You get an up bar, right, or you get one or more. Up bar here, sell bar the next bar. Up bar, sell bar. And then as you reverse and you start going up, you go up, you sell off. Right? You go up, you sell off. You go up, you sell off. And again today, same thing, right? Up, sell off. It's been that way for, what is that, 6 weeks? 7 weeks? That's a long time. And it's actually from here, what is that, February 19th, and we're at the end of the month, so it's almost 6 weeks at least. So that's not exactly a sign of strength, right? So one thing you see going on here is you don't have strong movement in the listed issues. You have it in the NASDAQ, right? You have it over here in the NASDAQ, big push up. You had it in small caps, and the only rotation that's taking place is in the small caps. But taking a look at what else is going on here, and that is that when we look at this, you know, Europe looks to try and trade lower now. The equities are doing those over-unders on 3 of the 5. The sectors still aren't showing signs of rotation, what we were just talking about. And the ones that push this thing so far, they're worn out. And profit taking is cutting in. And you still may get this breakdown on the whole. That's a lot of negatives in conjunction with all the issues with the S&P 500 over the last 6 weeks or so. So I'd be very surprised if we just push higher tomorrow. I'm more interested in seeing this thing pull back, because when it pulls back, and I'm not talking about the S&P, I'm talking about the NASDAQ, the NDX. I want to see the NASDAQ do that retest regen, and I'd like to see the Russell come in and close that gap and see how they behave. That'd give us a lot more information to decide whether or not these things are going to set up the structures to get up at other extra, 1.5%, 2% in most cases, or maybe a little bit more, and finish off those ABCD structures on the upside, and actually would be finishing off some range trades too. That's it for tonight. Again, reminder, not here the rest of the week. I will, of course, for members, I will be sending out information as time permits, but no more shows for the rest of the week. Have yourself a great one. Thanks for joining me as always. Take care of yourself. I'll see you when I get back. Good night, folks.